Yeah, I'm becoming professional now.
Congratulations.
Yeah. Okay, so it's been recorded now. So let's focus. So there are two types of patterns that moves with the market. First is M pattern and second is W pattern. Mostly, many of us know about the M and W, but there is more to it. Just like this, here. Here is M, okay, and here you see the nose or the neckline of M, and here is the entry point. Entry, okay, and retest, and boom, crash. So that's the M pattern. And similarly, there is a W pattern, just like here. There is also one M pattern as well here on S&P. So just for the purpose of sharing the knowledge with you guys, I am making this video. So here is the M pattern. Okay, so here is the nose, and here is the entry point, and here is the take profit. So take profit is here. Let's just delete this one. Yeah, let's drag it a little bit down here. So here is the M pattern here. Okay, here is a neckline, and here is entry, and here is a TP. Easy, but there is more to it. Now, let me show you the photograph, which I take from the Google to show the result. But first, let's show some more examples. Here is an M pattern, just like that. Entry and TP, okay, and the W. Here is like a triple bottom, not W. Here is a good one. Okay, here is entry, a little bit profit, exactly at double top. So here is a pattern that I'm talking about. So let's move this one to this pick, which is very important. Okay, so here, just like I said, here is this red circle is entry, and here is a take profit. Example, we need to take profit from where this leg starts. Okay, so here M pattern must complete, and here, and we must enter when when the price goes below this neckline. Here is a straight neckline coming from this. I think this is the nose, and if it goes below that, so we can enter at that price. And here is another simple M pattern. That's an extended M, and this is a short formed M. Okay, just memorize the name. Here is a simple M pattern. Okay, just like we see before that I show you. Here is extended M. So this is like a extended M. So this second part, the second wave of the M is extended and rejected from the top from another resistance, came back down, broken this previous support or retest, and then we can enter. Similarly here, short formed M, entry and exit. And here is a W pattern, simple W. Okay, entry, exit. Similarly, short formed W. So if you reverse this one, you will see something like this. And here is extended W, just like this one. Okay, entry here, so profit, take profit here, similar to this, from where this leg was formed. Okay, so these are the two patterns which occurs in the market so often. So let's move on to the charts once again. Okay, I'm back to the chart. Now we will see infinite patterns, just like that. Look here, what was the name of this pattern? It was extended W. Look, extended W. Okay, so here is the price where we will take profit. Okay, or here as well, and here is the entry. Here is the entry price and TP1 and TP2. Simple, easy pattern. Okay, no big deal. And here we can see all. Here is another extended W. So market X according to these patterns. These patterns are nothing. These are the behaviors of the traders. These are the emotions. These candlesticks are the emotions of the trader, the way a trader reacts in the market. Okay, after this dump, trader think this another like this is a orange bear trap. In the armor indicator is showing orange bear trap. Okay, we can see it because we are using armor, but other people cannot see all this orange line. Okay, and we can see this entry signal as well. So after the huge dump, we see a relief rally, and people are thinking from this point market is going to bounce back, but it won't. Then we see another crash. It forms a double bottom, and then what happens? It forms a W. Okay, and the best way to make profit from this entry price is this W here. This is the main targeted price here, and the candle must close above it. Okay, not close, but it should go above it. Sometimes it shows the fake out, but we need to be careful. Okay, so after a breakout here, then it's a retest. Majority of the time there is a retest and then bounce back. So market does not move like that or like that. Okay, so it moves in a zigzag position. So it breaks up, breakout, retest, and then here we have a take profit, another one red candle, and then move up, back up, similar to this price here. Like I said, this is the leg where everything starts. Okay, and notice whenever price hit this previous high, it drops. So here is where we take profit. Okay, sometimes W pattern fails, but it only fails, look, it only fails when candle fails to close above it. Okay, so here we must not enter. Okay, if the candle fails to close above it, so we must not enter right here. So we need to find something like this. Even if it retest, just don't worry. Just if you want to put a stop loss, put a stop loss a little bit below this nose, just some like 5 to 10% lower. Okay, put your stop loss here, just give it some time, wait, and boom, upside move, our TP will hit. Okay, our targeted price will hit. So let's move on. See what is this one? This is a shortened W pattern, just like we saw in the photograph that I showed you previously. Here is where we take profit. Here is the TP1 and TP2. Okay, so here is the W, shorten W pattern. We enter here, we take TP1 here and TP2 right here. Plain, simple, easy. So let me show the chart again, once again, to the new group. Okay, so here is simple patterns that we can follow in the market. So 70% of the time market reacts according to these patterns. These are very simple patterns. We can take entry according to these. Okay, here, enter here, exit here, enter here, exit here. Simple, easy. So that's it for now. If you have any question, then you can ask.